In the first video, I showed the closing process when we have net income. In this video, I will show the closing process for when there is a net loss. So, the closing process is when you get your account balances to zero, so we can start the period over. So I have a picture of a scoreboard because it's just like starting a ball game over. We have to reset the scoreboard to get prepared for the next game. So we reset the scoreboard back to zero, just like we're going to reset these accounts back to zero to get ready for the next accounting period. And I have an adjusted trial balance, and the accounts in yellow are called temporary accounts. This means that we close these accounts, they are temporary, and they start back over each period. The other accounts listed are permanent because they don't start back over. They continue from period to period with the balance. Our first step is to close revenue and expenses to capital. So as you can see up here, we have two revenue accounts that have debit balances. So to close fees earned, I'm going to debit it for the $5,000, and to close interest revenue so that these accounts are zero, I'm going to debit interest revenue for $2,000. And I also want to close our expenses, so salary expense has a debit of $5,000, so I need to credit it to close it. And rent expense has a debit balance of $4,000, so I will credit it to make it have a zero balance. Now I'm at the step where I need to close revenue and expenses to capital. That means I need to transfer the amounts in the revenue and expenses to capital. So if I look and see what I have in fees earned and interest revenue, it would be $7,000. And then if I look and see what I have in expenses, it's $9,000. So I can see that I'm in a net loss situation because I have more expenses than income. So I have a net loss of $2,000. So you know how we list our debits first and our credits second? I'm actually going to need a new line here because I'm going to need to debit capital. So let's put a new line here. So I need to debit capital for the 2,000. And that is going to transfer my net loss to my capital account. And to verify that our debits equal our credits, we have total 9,000 in debits and a total of 9,000 in credits. Step number 2 says to close drawing to capital. So drawing has a normal debit balance, so it has $1,000 as a debit balance. So I need to credit drawing to get that balance down to zero. And I'm going to close that to capital, which is also going to reduce that amount of capital to capital. So let's look and see what's happened to capital during our closing process. It started out with a balance of a credit balance of $131,000. I meant to change this. Our capital account, our beginning balance is going to be $160,000. And during my closing process, I reduced it for $2,000, and that was my net loss. And then I reduced it again for my drawing for $1,000. So my new balance is going to be the $160,000 I started with. Oops. And then it's just going to be subtracting out the net loss and the drawing. So my ending balance is $157,000. So if I want to look at my final trial balance, my post-closing trial balance, here's what I'm going to do. Well, first thing I need to do is change the title to post-closing trial balance. And then my new capital balance is $157,000. Then I've zeroed out each of these accounts. And then I could just get rid of them because I don't have to list accounts that have zero balances. So my post-closing trial balance is made up of my permanent accounts plus my new balance in my capital account.